This season of the No Bullshit Property Podcast is brought to you by Loft, a family-owned, independent business based in Manchester with over 21 years of experience in transforming residential interiors.
Welcome to Season 3, Episode 4 of the No Bullshit Property Podcast. Today we're joined by Akeel Malik, partner at Shore Capital and fund manager of the Urban Splash Residential Fund. Thanks for being here today.
No problem, thanks for having me.
No problem at all. We're going to hear today a bit about Akeel's journey, the mission behind Shore, and the approach to design-led rental homes in the UK. But a quick reminder before we start to check out our previous episodes to learn more about our approach to transformative property management in the build-to-rent sector and how we're building sustainable communities of the future. So, Akeel, I was keen to get you on our podcast because I think you've got a really good backstory. So, it'd be great if you could start there, telling us a bit more about your backstory, about yourself, and the journey to launching Shore.
Yeah, of course. No, thanks again for inviting me on. So, grew up around Manchester, just in Wilmslow. Went to school here. My family were sort of involved in property. They had a small B&B, which I grew up around. So, was sort of in the sector without really realising it. And after school on holidays and weekends, I'd often go there and speak to different guests that came through, and a sort of real cross-section of society. And I think what resonated was, one, an interest in buildings, property itself, but more than that was the interaction with people within those spaces and the fact that people would come, like Oasis this weekend for a gig or a family celebration, and the fact that you were creating a space where people could have these memories and experiences was something I found pretty cool and interesting. That was sort of conflicting with what my parents did, being the least cool thing in the world, obviously. So wasn't a very clear path that's what I wanted to go straight into. And at the time when I was growing up, it was definitely technology, Silicon Valley was all exciting and interesting. And when I was at school, did a few different small business bits, but one area where being young was actually an advantage was setting up a social media marketing agency for local businesses. So me and a couple of mates would go and set up Twitter and Facebook pages for businesses around Manchester. And that sort of continued then into university. I did set up a small startup as well with a couple of mates there, which was really focused around like centralising events on campus, which started off where we were at Oxford, and then grew to a few more across the UK, US and Europe. And then towards the end of uni, it became a decision as to whether to stick with that or pursue something else. And at that point, I had sort of started feeling the pull of property and real estate again. I felt like I'd seen it at a very local level, but was quite interested in what an institutional the property world looked like. So I went and worked at UBS in real estate investment banking in London for a couple of years, and it was great experience, a lot of hard work and late nights, but I was lucky that there was quite a lot of activity going on. So we worked on things like the take private of Camden Market, the sort of real estate around there, the acquisition of Logical by CIC, which was about 12 billion euro transaction. So really opened my eyes to the scale of property and real estate. And at the same time, there were quite a few student accommodation platforms growing. So sort of transition from aggregators to then people building operating platforms around them, brands and institutions and sovereign wealth funds, pension funds investing in them, companies like Unite listing and scaling quite significantly. So I found that really interesting. And then as we were looking at advising some of those companies, there'd often be a very long investor presentation, and probably one page out of 100 would talk about operating platform, whereas that seemed to be the key to driving a lot of value for the future. So I was interested in that, and I thought that residential property was a natural evolution, I suppose, from what was happening in the student sector, but there was a very big gap to bridge from a small family B&B to any sort of institutional residential property investor of the scale of a Unite or something like that. So wasn't really sure how to go about getting started, though I did know I wanted to be part of building a platform rather than advising on a transaction. So I'd heard about a conference called MIPIM in France, which I'm sure a lot of your listeners will know to and will have been to. I was pretty green, didn't really know anything about the sector or the fact that people don't really go to these conferences for the actual talks. But I asked if I could go as part of the UBS team. I was a bit too junior at the time, so I just took holiday and bought myself a ticket and thought, I'll go there, I'll be able to put my head above the parapet a bit and see what else is going on. So went and listened to a lot of the talks, but didn't have any invites to any dinners, drinks, meetings set up for stuff around that, which obviously now I know is a very important part of it and how a lot of networking and meeting gets done. So actually then was a bit of a lonely time. I thought, okay, I've learned a lot, but I don't really know anyone here. There's a load of people all chatting to each other and having a load of drinks, but I'm not really at any of them. So I thought, I've got to get something out of this. The ticket wasn't cheap, and I ended up Airbnb-ing a boat in the harbour. Told all my mates I was staying on a yacht in the south of France, but in practice there was no hot water, no shower, so I was using the public facilities to get ready and go in and try and do some networking during the day. So I thought I needed to try and get something out of it, and I thought, well, if I look back at the people that are doing interesting things around Manchester, which is where I grew up, then at least I'll have a reason to start a conversation and I'll understand a bit more about what they're working on, because it's a place that I was very familiar with. So I made a list of people that I wanted to reach out to, and people like Sir Howard Bernstein and others who were there, and one of those was a guy called Tom Bloxham, who is the founder of Urban Splash. And when I was at school, I remember Urban Splash. I'm not sure I really knew it was a property brand. I knew it was an interesting, cool brand around Manchester. But Tom didn't look like a property developer, and a lot of the buildings that Urban Splash developed didn't look like the typical residential developments like Chips in Ancoats, for example. So I reached out to a few of those, and including Tom, and asked if I could just have a chat. And some of them replied, some of them didn't. But quickly realised the best way to find people at MIPIM is find out where they're going to be speaking, or go to the Manchester stand and try and grab a beer with them. So went to a panel where Tom and a few others were doing a discussion, and then hung around at the end basically like a bad smell until he talked to me. And when we managed to have a chat, he said, if you could wave a magic wand, what would you be doing? And I said, I'd like to set up a residential investment fund and some form of operating company alongside it to help drive value and remove friction from the renting experience. So at that time we then said it'd be great to catch up back in Manchester, see if there's anything we can do, and that was in April 2018, and we caught up the following week. Tom then introduced me to a friend he'd known socially called Paul Goff, who runs a private equity investment company called Star Capital, who have historically invested in infrastructure and asset-backed businesses, but they've worked with a lot of institutional investors like Canadian Pension Plan, GIC, have invested over 5 billion in assets, so track record and experience on the institutional management side. Tom clearly super experienced on the residential and investment side. For those that don't know, Urban Splash has been around for about 30 years, investing in regeneration areas and regional cities across the UK. So there was an opportunity to do something, the three of us, setting up a new investment management business focused on operational real estate and living in particular, and that's what Shore Capital Partners is.
No, great story. And I think the other part of the reason why I was keen to get you on here is kind of what Shore's mission is, because you're not just investing into anything bland white boxes. You're very focused on design-led schemes and obviously that rental experience. So how do you think those, or particularly design-led and also the operational experience, how does that then flow through to your mission and what you want to try and achieve?
Yeah, no, it's central to it and really important. And I think the way it sort of manifests is through the partners that we choose to work with. So our aim really is to connect capital with best-in-class delivery and development partners, and then add some value through an operating platform as well alongside that. And the partners that we work with typically have some form of regeneration, placemaking focus, often work in close collaboration with the public sector, and sort of embrace sustainability either through modern methods of construction or bringing existing buildings back into use. So they're often not the projects that would be necessarily nice and neat and easy for a big institutional fund to sign off at an investment committee. They often require a bit of a deeper understanding of the local market, the area, the counterparties and stakeholders involved, and some collaboration with the public sector. For example, areas like New Islington in Manchester or the Climate Innovation District in Leeds, where they are multiple phase, long-term regeneration schemes. But in terms of our mission at Shaw, we'd really like to be that long-term capital partner for developers working on interesting, really important, but sometimes challenging projects to fund, and using the experience of the wider team. And we've been going now for 7 years and investing in these schemes and have a track record that we can point out for our investors from a returns perspective to show that investing in well-designed homes fundamentally is in our view the most important factor for creating interesting places for people to live. And when you overlay the operational and frictionless experience that we're only at the very beginning of the journey of and trying to work towards, but hopefully then you can create places where people really enjoy being, have some pride in, and are quite happy to stay for a long time and build a community around that as well.
And have you found that a difficult proposition to put forward to investors to raise capital, because it is a slightly different approach from like you say, the typical institutional grade build to rent? Has that been a difficult journey, or were people very receptive when you first started putting that proposition out there?
It's a very good question. I think there's definitely categories and groups of investors, and I think that that principle of investing in great places to live, but sometimes areas that can take a bit of time to deliver, or require a large capital commitment to have certainty that those schemes will be delivered, sort of require long-term patient capital investors. So if you're an investor with a 3 to 5 year horizon, then it's challenging sometimes to see the value uplift within that space of time that people will be expecting and underwriting. I don't actually think that necessarily other categories of build to rent are better on that side from a returns perspective, unless you're taking additional risk around development risk and planning risk and things like that. But I do think it categorizes investors. I think the important component of what we do as well is we typically underwrite rents at around 30% of median incomes as well. So whilst we're not an affordable housing investor per se, we do look at the rents that we're underwriting from an affordability perspective. So I think when you combine that with the fact that you're typically investing at lower capital costs per square foot because you're in areas with less proven values, and then most importantly you're working with partners with a very strong track record of delivery, so you have confidence around the product that they're going to build and the community that they're going to create. And ideally, we also work with partners that will retain some form of long-term interest in the scheme. So often we will take the residential elements with perhaps some commercial on the ground floors of the residential property, but they might be mixed-use neighbourhoods with some commercial F&B retail, which our development partner might hold as part of their balance sheet. And then at least we know that we're all working towards creating that long-term sense of place as well.
Again, it's something that founders very aligned on, identifying those areas where there's the regeneration potential, there's the placemaking potential, but it often does take a leap of faith to to put put rents against that you need to do so to make schemes stack up at the moment. So one thing that we talked a lot about with people on this podcast in context of build to rent is amenities and how that fits into it. And I think something that we've found on schemes that we've looked to deliver in these more value constrained areas is it becomes even more difficult then to justify amenities within there, which obviously carry an OPEX cost. What's your approach to amenities within schemes?
Yeah, I think generally our view is the best amenity is the location and the immediate area, and I know it's something that's core to what you guys focus on as well. But if you're in an area next to water or green space, I think that goes quite a long way from creating a great place for people to live. And sometimes the challenge with some of the regeneration and placemaking schemes is there's a lack of commercial offering, and you're asking people to live in an area where you may have a new town centre being built, or you may have new sort of commercial uses coming further down the line. I think it's quite important to front load some of those on some of the placemaking and regen schemes and get really good operators in, but it can just be a simple bakery, a craft brewery, something like that gives people a bit of a hub. I think we've seen is quite important. But in terms of general amenitization, I think that we've seen also with different sorts of technology that you can include in buildings. Sometimes it's quite tricky to know what is sort of seems exciting and interesting today and whether that will still be appealing in 5 years' time. So I think if we are looking at amenity space, generally flexibility is number one, and being able to reconfigure that over time and almost view it as requiring some continuous capex and reconfiguration and making sure there's a budget for that, so that it can support the wider building. I think the other side is amenity often comes with cost and increased OPEX, which is underestimated, I think, at the beginning of a project, and it can lead to quite significant leakage further down the line, which you just need to be confident is going to be valued by the people that are living there as well.
Yeah, absolutely. Again, similar to our approach, our view has long been that the location is the most important thing and the amenities surrounding. And if you are going to look to include amenities within your development, making that something that benefits the wider community as well. So rather than having just resident-focused spaces within there, like you say, something as simple as a bakery or craft brewery, whatever it is, that actually improves the place more generally, because then it's also potentially revenue generative than being an OPEX drag or a cost for the scheme.
And now let's take a quick break to introduce you to the Loft showroom. At their offices in both Manchester and London, Loft have showrooms where you can explore carefully curated spaces featuring the latest key pieces from their product ranges and multiple room sets designed to inspire. With over 21 years of experience, Loft is a trusted partner in the industry, working closely with BTR developers, operators, landlords and residents to create residential interiors that are more than just functional. They're thoughtfully designed to enhance the way people live. Loft's in-house team provide end-to-end solutions, including interior design, property staging, refurbishment, delivery and installation, removals and recycling, and even virtual staging. Visit Loft's Manchester or London showrooms to see how they can transform your space, or go to loft.co.uk to discover more about the sectors and customers they work with.
Just think about the sort of coolest places to go in Manchester city centre and places that you enjoy going. A lot of the time they're things that pop up from a temporary use because an interesting operator that wouldn't have had the covenant strength for a long-term commercial let has been able to use a place like Ramona, or in London you've got Box Park and Mercato as examples of these sort of temporary uses that then become real hubs and places that people enjoy spending time. So I think it's also an opportunity to perhaps be a bit more flexible with the operators that come in, and if it's someone that's got some connection with the scheme and location in some way, then you can do a load of interesting things. There's in London, I know on a Ballymore scheme around Brentford, there was Duke's, which was a really interesting classic car sort of storage and trader, but then built up a load of pop-ups around it, like a cinema, music venue, and I think having that flexibility, which would be difficult if you were in a city centre and you had a commercial space that you knew there was a sort of potential to get a higher covenant use case in with a guaranteed rental level, but actually it can also be a plus for the scheme and make it a bit more interesting.
Mm-hmm. Yeah, absolutely. I always ask the question, but I always think I know the answer to it before I ask it. Challenging environment out there. What are the biggest challenges you're facing currently in terms of delivery on your mission?
Good question. I'd say I think we've come at least through a challenging environment where there was more uncertainty. I'd say it feels at least like now we know and understand a bit more what the challenges are, rather than everything just being a bit difficult. So, over the past 2-3 years now, clearly rising interest rates, cost inflation, general uncertainty from a regulatory perspective, both through the development process and Building Safety Act, renters reform, leasehold reform. There's been a lot of change in the sector, and then obviously more recently, sort of on a macroeconomic side, currency impact for investors into the UK as well, and what the UK as a country looks like as a stable, safe place to invest capital, and more recently its growth prospects as well, and what that looks like. I think that from a residential and real estate perspective, but particularly residential, the fact that there is this structural undersupply of housing, I think, goes a long way. The fact that the rental market is very immature compared to other geographies, 5% professional or institutional investment in the build to rent or wider rental market compared to in the US and Germany, other areas of Europe, typically 30% plus. So the fundamentals that residential property in the UK has a lot of improvement that can be done to it, and a lot of demand from people looking for fundamentally decent homes to live at sort of reasonable rents, I think remains. I think the fact that it's difficult for institutions to access, and just capital in general, to access that market because of a limited supply of sort of good quality stock still remains, and also shows the importance of good development partners with a track record. And then I think clearly where we'll come to, viability is difficult, and really driven by build cost, and in an environment where yields have shifted outwards, and rental inflation is coming down. It is difficult to make schemes stack up. I think that's where a private public sector collaboration is increasingly important, because we are at a point where private sector capital's goals and public sector goals should really be aligned if that aim is to attract more investment into UK housing and make it accessible and increase the overall quality of stock and standard of living for people here. So partnerships where the public sector performs a bit of an enabling approach, but then also potentially benefits from longer term uplift for that, rather than necessarily writing blank checks that then disappear. I think it's an interesting time, and I think there is a willingness on both sides to try and explore those solutions, and I think it's just a question of how quickly can that be done, and at what sort of scale can it be done? Can it be significant enough to make a real difference?
Mm-hmm. Yeah, I mean, I don't like to get political, but I'd like to get a little bit political. Public-private partnerships clearly have a big role to play, and have over the last few years, in terms of brownfield funding, unlocking a lot of schemes that have faced these viability gaps. At a sort of higher level, obviously, Labour government, since it's come into power, focused heavily on housing. with some interventions set out in the planning system more recently as well in terms of additional grant funding to affordable housing. Are these things on the right track, do you think? Are these the right interventions? What would your intervention be if you were there as the decision maker to kind of kickstart the housing market based on the challenges you've just mentioned?
Well, definitely don't claim to have the answers, but I'm not sure that anyone does at the moment. No. So I think from our perspective and the visibility we have is really from an investor in either from a forward funding or forward commitment side, and talking from that perspective, I think that the planning process does seem to have got easier. So feedback from our development partners is at least there is visibility that there's at least a push for people to make decisions more quickly on planning. It'd be interesting to hear if you're feeling that as well or not. But clearly that's only one element. I think the big challenge at the moment is higher rise buildings. We are very wary about investing in anything over 18 metres, given the gateways and timing that it's taking for schemes to get through that sign-off process, and obviously leads to a lot of holding costs for a developer. And I think that a lot of the schemes that have come through probably haven't factored those in, and that's been quite challenging. So I think it's not unique to us, but other institutions are taking the approach of lower density, whether it's low and mid-rise apartment buildings or single-family housing, feels easier to invest in at the moment compared to some of those higher-rise buildings, which causes its own challenges around volume of properties being delivered. But I think that along the lines of that private-public sector partnership, there's been this push from the government to say make it easier or heavily steer UK pension funds to invest domestically, and there's a question over what the role of pension funds are. Clearly they have a responsibility to their own members and generating returns for them. Equally they benefit from tax reliefs and other things that may mean that the government can say that they should invest X amount into the UK. I won't comment on whether it's right or wrong, but I do think that that unlocking those UK pension schemes, and in particular the local government pension schemes, to invest locally could be really powerful. I think it can hit the sort of dual target of helping deliver on the government's targets around housing and growth and infrastructure, as well as investing, if done in the right way, in schemes and projects that have a local impact and generate good returns. Clearly, doing it in the right way is an important part. I think that the local government pension schemes and the pooling process that they're going through can also be a conduit, because they sort of have to sit at that intersection between public sector and private sector. So helping with some of those partnerships, they could be in a good place to do that. There's clearly a lot to be done and sort out from a governance process and how that all works with the pooling that they're going through and consolidation of underlying funds. But I think that something around that area of investment of domestic capital, of which there is quite a lot sat in the UK, is probably the only way really to achieve the sorts of numbers that the government are talking about, as well as clearly reforms on the planning and regulatory side.
Yeah. I mean, we're fortunate to be sat and based in Manchester, where we've seen the local pension fund here, the Greater Manchester Pension Fund, come out and state a lot of these goals and be quite innovative, as Manchester as a city has been over the years.
Yeah, for sure.
So,
I think that then acts as a catalyst for other institutions as well, and it's a boost of confidence, and both for other domestic and international institutions to invest here as well.
Yeah, definitely. You mentioned a couple of times about single-family housing. So, in the context of there not being enough stock in the UK that's kind of purpose-built for rental property, again, something where I think we're aligned. We've been working on designing our own purpose-built housing as rental stock. Presumably single family, an area that you're looking to invest in and see it as a potential growth area for the rental market in the UK.
Yeah, it is. So we've got our portfolio at the moment is probably about 40% single family housing, and our long-term target is to keep it around that level. So so having a combination we think is important, and fundamentally having a variety of homes for people to choose from is something we try to do. I think the single family housing is really interesting. We're sort of focused on urban or urban fringe single family housing as well, which I think is even scarcer than single family housing that's often suburban, and particularly in the areas where the bigger volume house builders are active and there have been big portfolios trading, but they are rarely sort of urban offerings. And I think that the ability for young families or professional sharers to live in a city centre and have more space and typically a little bit more green space, and whether that's communal or private as well, there isn't that much, and so it's quite a resilient investment we've seen. And to your first question about why invest in design-led buildings and how do you articulate the value of that, I think a lot of it comes down to that differentiation and resilience. And over time, buildings like this one or some of the other existing buildings that you guys have brought back into use, as well as our other partners like Urban Splash, maintain that character and actually don't change that much over 10 years. They're still cool, interesting places to be and live, whereas some of the new build stuff becomes a bit tired if you're just constantly indexing on whatever the later set of amenities might be, for example. So I think on the single family housing side as well, that differentiation of being able to offer flexibility, I think the challenge as well is there's a perception of housing around city centres as being the historic HMO sort of quality, and I think councils understanding and differentiating between new purpose-built houses that I think can play quite a big role in creating affordable places for people to live in the city centre, because people can live in them as sharers, and that's what I did when I moved from uni into a city centre, and a lot of my friends did. But there are some challenges around doing that from a planning perspective at the moment, which it would be good to at least have an example of working with a council on that and showing that a new model can be delivered. But I think if that can be done, then I think it's a great way to create mixed communities as well. And we've experimented with garden squares, which historically in London clearly super famous for them, and I think in those regeneration areas and schemes where you're working in partnership with the council and local authorities, and you can deliver some of the lower density housing because the land price allows you to. I think those can be some of the most interesting neighbourhoods as well, and I think particularly if you guys are looking at new and interesting models, then I think it'll be a great addition.
Yeah, no, I'm a big proponent for this country needs more purpose-built single family built to rent. A lot of the stock so far, like you say, has been more peripheral house builder stock, which is fine. It's fit for purpose for what it does, but it hasn't been designed with a rental life cycle in mind. So if we're going to really push that as being the next growth sector in the build to rent space, there needs to be more of it being purpose built and delivered.
Yeah, and I think the challenge is then people understanding how to operate it and having examples, because it is quite different to traditional build to rent schemes. And if you're just looking at it as one property with an estimated rental value of whatever it might be, and you're looking at it from an affordability perspective, then if you're just assuming one family rents that, for example, or one household, then you end up filtering out quite a lot of people just by the level of rent versus average incomes. If there's a way that there are smaller housing typologies rather than larger ones, or in the larger ones there's an ability for sharers and they're operated on a sharer model, I think there's a huge opportunity. And I think that's probably where the challenge of making some of the new concepts stack up is we don't really have a playbook of those models being operated so far.
Indeed, yeah. And I think that goes a step beyond that, because we've also been exploring other kind of subsectors of the build-to-rent market. You know, there's been some talk about it, some schemes starting to come forward for over 55s build-to-rent or later living build-to-rent, as well as co-living, which is kind of that bit in between PBSA and build-to-rent. But like you say, there isn't really a playbook for them, so it's very rapidly evolving.
Yeah, for sure. And I think that, especially on some of the larger placemaking schemes, these mixed neighbourhoods are often the best ones as well. So having, and also longer term, an operating platform that can do the whole life cycle, so that people have confidence in a brand, and as they move through different stages of life and want different things, that they can have faith that, you know, you'll be delivering something that ticks those boxes for them, I think is really interesting as well, but doesn't yet exist.
Yeah, definitely. So what's the focus for the rest of 25 and going into 26 for sure?
So we're really keen on continuing to build out our development partners. So we currently have sort of strategic partnerships with Urban Splash and Situ, who both great, you know, value-led developers with a very core focus on regeneration, placemaking and sustainability in different geographies. So finding more partners like that is really important to us. What we want to do, because we're a sort of long-term patient capital investor, is build scalable relationships and partnerships so that we can continue to build the core portfolio and then build out the operating platform around it. So we'd really like to invest with people that can deliver on an initial transaction and then scale with us over the next few years, so that we can continue acquiring, you know, a couple of hundred homes per year, for example. So that's one side. I think the other for us is funding those partnerships and relationships, so raising additional equity, and we've got some great institutional and also family office investors on board with an ability to match new equity that comes in. So also keen to find more long-term funding partners, but also very specific, I suppose, about them sharing that long-term horizon, so that we can invest in some of those, you know, placemaking and regen sorts of schemes that we've been talking about.
Very good, yeah. And reintroducing the magic wand that Tom mentioned. If you could wave it now, where would you like to get to with it all?
Very good question. I mean, our ambition, we'd like to be the leading owner and operator of design-led rental homes in the UK. So we want to get to significant scale, you know, 10,000 homes plus across the UK, and we want people to know that, you know, renting with us is a certain standard and level of service that is consistent no matter where they rent from us, with you know, a core group of development partners that all feed into that and continue to grow the platform so we can share in each other's success.
Sounds good. Well, hopefully we can help you get there with it in some way, shape or form. Thank you for coming on. It's been really insightful, really informative. So, Akeel, thank you.
Thank you so much for having me. Thanks.
Cheers. Pleasure. Quick reminder to check out our previous episodes to learn more about our approach to transformative property management in the build-to-rent sector and how we're building sustainable communities of the future.